Are you struggling in dealing with complex and changing tax policies? This smart tax engine with flexible tax rules can help you with that. Welcome to WellCloud Value Delivered session. Today we have a case of an operator in South America to share. I am Tang Huilin, Solution Engineer of WellCloud. I'm about to give you the introduction. For telecom operators, taxation must be accurately implemented according to local laws and regulations. In different countries, tax rules and requirements are different. In South America, the tax rules of telecom operator are more complicated. First, there are various kinds of taxes, including value-added tax, consumption tax, telecommunication tax, and some other taxes. The same fee may require multiple taxes. And the local tax exemption policy is very complicated, divided into permanent tax exception and temporary tax exception, account-level tax exception and business-level tax exception, and the tax exception is also related to the city. In addition, the government often introduces new tax laws and regulations. Based on that, operators not only need to comply with the complex tax law, but also need to assure the tax accuracy, and even have some differentiated services to improve customer satisfaction. So our tax support is born at the right moment. Taxation has always been an important part of the charging and billing process. It can be calculated directly during charging or calculated uniformly during invoicing. These two methods can be combined. The tax support in this session is mainly concentrated in tax calculation of charging. With years of know-how in the telecom industry, expandable tax calculation engine, powerful tax matching rules, and system interconnection capabilities, WellCloud has carried out end-to-end perfect support on the taxation, from tax proposition, tax calculation, tax check, tax display to final tax payment, showing as follows. This end-to-end process perfectly complies with the local tax laws and provides accurate tax calculation. It is also user-friendly in multiple aspects to improve the customer satisfaction. For tax support, WellCloud has two types of tax engines, basic and extended. The advantages of the basic type are simple and intuitive, easy to use, and the delivery cost is relatively low. The extended type relies on rule engine with flexible configuration and more powerful functions. On the basis of the extendable tax engine, we can have a fast tax delivery by quickly studying the local tax laws with our customer for any project, clarifying the structure of the local tax laws, and quickly mapping it to our smart tax engine. Therefore, we can quickly select the tax engine for customers and output the tax rules. For general projects, the basic type is enough to support customer requirements. Relying on the basic tax calculation engine and the tax exception flag at the customer or account level, it is sufficient for tax calculation of one-time charge, rental fees, and usage charge, as well as the basic tax exception and the exception validity period. So for basic engine, when price is configured, the account item type of each price will be bound to a configurable tax type, and one tax rate will be bound to each tax type. For tax exception scenarios, the tax exception flag is possessed at the customer or account level, and the effective time of this flag is managed. If the account tax exception flag is yes, and within the validity period, the price will be tax exempt. Here we are in an environment which is using the basic tax engine. In tariff configuration, we can see each price is bound to a result account item type. If we check this account item type, we can see that each account item type is bound to an existing GST type, which is what we called tax type. And if we check the GST type, we can see that each GST type is bound to a tax rate. So when the customer uses the service, the charge is calculated and the corresponding tax will be calculated according to the bond tax rate. And for tax exemption scenarios, we can see that for the customer, at the account level, there will be a tax-free flag on the account level. If it is yes, a validity period needs to be attached as well. For this project, because the local tax laws are very complicated, the basic tax engine is insufficient to support the complex business needs. WillCloud has expanded on the basic tax engine, enriched tax calculation rules, and upgraded the tax exception policy to support local tax laws. The extended tax engine relies on a flexible rule engine, for which the concept of tax rate matching unit is added. A tax rate matching unit is a tax rule group, and each tax rule in this group is executed in sequence. One rule contains multiple tax rule steps, and the relationship between steps is all. Determine and output a final tax type according to all the steps in the tax rule, and this tax type will be bound to a tax rate as before, and taxes will be calculated based on this tax rate. For tax exception, except for the original customer account tax exception flag, based on the expanded tax rules, it also supports rich judgment based on the different tax rules to determine whether to be tax exempt. Here we are in the environment, which is using extended tax engine. In the tariff configuration, we can see that each price is still bound to a result account item type. If we check the account item type, we can see that each account item type is bound to a tax apply, which is what we called tax rate matching unit, not a single GST type. When we see the tax rate matching unit, the tax apply, we can find out it is a tax rule group which contains several tax rules here. And each tax rule contains three main components. The first component is the tax rule itself, which is used to make judgment. It contains several execution steps. If one of the steps condition is passed, the result of the tax rule is passed. If all the steps are failed, the result of this tax rule is judged as failed. So the second component is that when the judgment result is passed, the system will execute the tax calculation according to the configured passed tax type. And when the judgment result of this tax rule is failed, the system will execute according to the configured failed tax type. And as we told, each rule contains several execution steps. Each step of the tax rule supports the rule configuration according to three types of configuration data, like IE-ATTR, which is the charging AVP attributes reported by network elements, ACM, which is the customer accumulation, ATTR, which is the customer account or product attribute. Each of the rule step contains three main elements: resource, tax operator, match value. Resource is the attribute data in the system, such as offer price and customer home location. The tax operator is the judgment sample, and the match value is the judgment threshold. For example, if the resource is the tax-free flag of the account, the tax operator is equals, and the match value is Y. means it is used to judge whether the account matches the tax exemption policy. Therefore, based on the extended engine, when prices are configured, the account item type of each price will be bound to a configurable tax rate matching unit. If the customer's condition meets any of the execution steps configured in the tax rule, the system will calculate the taxes based on the past tax type. Otherwise, the system will calculate the taxes based on the field tax type. And each tax type will be bound to a tax rate as before. And for tax exemption, in addition to the customer or account level tax-free flag in the basic engine, with the tax rules, it also supports judgment based on different tax rules to determine whether to be tax exempt. For example, to judge whether the purchased shop is in the tax-free area or not. Take a typical new connection scenario as an example. In this scenario, the customer has two accounts, Account 1 and Account 2. The billing address of Account 1 is in the tax-exempt city, while that of Account 2 is not. In this scenario, two accounts are opened for the customer in the same order. Use Account 1 to subscribe to the mobile plan. The mobile plan has 3 one-time charges, which are for voice, SMS, and data packages. The fees and taxes will be directly calculated on the order. Use Account 2 to subscribe to the same mobile plan. At the same time, subscribe to a handset and an SD card. The mobile plan has the same 3 types of one-time charge as above. Both the handset and SD card also has their own one-time charge. Fees and taxes will be directly calculated on the order. So we move on to the system, create a new connection order as described. We can directly get to the shopping cart. 2 mobile plan, 1 handset and 1 SD card already added into the shopping cart. So we can get started. Order the first mobile plan with Account 1. Fulfill other necessary information, like number, order the same mobile plan with Account 2. Fulfill the necessary information. And use Account 2 for the handset and the SD card. Get an overview of the new connection fee. The fees of Account 1 are all tax-free, and the fees of Account 2 are delivered into three parts: value-added tax and consumption tax for the service, and value-added tax for the handset and accessories. Now we can move on to tax logic to see if the tax is correct. For account 1, there are three types of one-time charge for voice, data, SMS package when account 1 subscribes to the mobile plan. We can check the tariff configuration and take the one-time charge for voice as an example. The result account item type for this one-time charge is recurring mobile plan M for voice. We can check it. And find out the associated tax rate matching unit is VATS ICOS voice tax. And we can check this. This tax rate matching unit contains two tax rules, which are used for calculate the value-added tax and consumption tax for the voice service. And this value-added tax are meant to judge whether the account meets the tax exemption conditions. If yes, conduct the tax rule of pass tax type, VATS 0%. The tax rate will be 0%. If all steps of these VATS tax rules are failed, we'll conduct the failed tax type VATS 19%, which is the normal rate of value-added tax, 19%. So, as the billing address of account 1 is in the temporary tax-free area, for this tax rule, it will execute the pass tax type, VATS 0%. We can check the result. For account 1, all the tax is 0. For account 2 has ordered mobile plan the same as account 1. It also contains two types of tax rules, value-added tax and consumption tax. Since account 2 does not meet the tax exemption condition, so finally it will execute the failed tax type. So the tax rate for the value-added tax for voice service will be 19%. And the consumption tax for the voice service, the logic is the same. So the result will also be failed. It will execute the failed tax type. So the tax rate for the consumption tax of voice service will be 4%. But for the consumption tax of data and SMS service, there is a new judgment rule. This new judgment rule is to judge whether the subscriber's data and SMS usage is less than 1.5 UVT. If yes, pass it. UVT is a local general reference standard. Since this is a new connection order, so the data and SMS accumulation is 0, which is less than 1.5 UVT. Therefore, it will execute the rule of pass tax rate. Means the consumption tax rate of data and SMS service will be 0. We can check the result. So for voice, the value-added tax rate will be 19% and the consumption tax rate will be 4%. And for the one-time charge for data and SMS, the value-added tax rate will be 19% and the consumption tax will be tax-free, will be 0%. With the support of such an expandable tax engine, we can quickly adapt to the tax requirement of any type of projects, no matter simple or complex, and provide customers with accurate tax calculation on the basis of local tax laws. In addition to tax calculation during charging, this Smart also supports tax calculation at billing level, which is another topic. Of course, in addition to assure accurate tax calculation to customer, WellCloud also provides follow-up tax check to ensure the correctness of taxes. After the tax calculation is completed, in terms of tax check, this Smart provides a variety of capabilities. After the one-time charge is taxed, invoke the third-party interface to check the tax correctness when generating sales invoice. If it is incorrect, the sales invoice will not be generated. This Smart will also check and adjust the failure rate of the invoice. So far, there has not been a case where the generation failed. In addition, when all charges are generated in the invoicing process, this Smart provides audit script to conduct internal verification of all taxes, and also conduct tax check with third party to further ensure the tax correctness. Besides, this Smart Business Intelligence will also provide corresponding tax reports for reference. Under such sophisticated multi-step tax check, the tax accuracy is guaranteed, and operator can also obtain clear and transparent tax reports. Based on such accurate tax calculation, WellCloud actively helps operator improve customer satisfaction. We can provide customer with CDR-level tax display. Tax category and amount are also displayed correspondingly, which greatly improves the transparency of taxes. Such contents can be acquired through various channels such as customer self-service, business hall, dealer, call center, and so on. For some special taxes and special customer groups, we can provide tax rebate function to reduce human participation. In an environment of fierce business competition, we provide tax revise calculation compensation to help operator internally digest complex taxes of some customers, thereby providing differentiated services, reducing interpretation costs, and improve customer satisfaction. That's all from WellCloud. Thanks.